Good afternoon, traders. Welcome to the More Analytics Afternoon Energy Podcast for April 17th, going into the 20th. Hope everybody had a good week trading. I'm going to start off with the natural gas. Okay, we've been bearish overall from $8.20, 0.8. We've seen $6.68.6 to the downside. A lot of other bearish calls in here. Those are all on hold. I said I'd be aware of possible macro exhaustion down at 258.10. And we were basically holding that with a 256.10 low, and it bounced 146 ticks. Also, apologize, this part of this upper paragraph I did not update this morning. But anyway, the trade back above 263.40 has brought in 73 cents of strength. That was the break above this line. And then the trade above 264.60 projects this upward 115 ticks minimum, 285 ticks plus maximum. And that was the break above this line. And we've attained 61 ticks so far. If we were to fail back below that decently, look for decent pressure to come in. That's going to come in at 262.90 minus 1.3 per hour, starting at 6 o'clock p.m. Sunday. Also, a decent break below this formation, which is going to come in at 263.90 plus 1 tick per hour, starting at 6 o'clock p.m. That'll warrant decent pressure, but that's not a very well-formed formation. It'll just be creeping higher, so I'd be aware of that. Maintain gap higher on Monday would leave a medium bullish reversal below. Okay, and the crude oil, left a pretty significant gap lower on the day here before short covering pretty hard off the lows, which suggests we may see some slightly higher trade up into this gap before/if resuming lower trade. I'm not going to go over all the higher time frame stuff. The trade below 114.35 has brought in $27.39 with a pressure warned about. Number of other bearish calls in here. The trade below 90.83 has brought in pressure down to 78.97. I also said that decent trade below 85.58 will project this downward $6 minimum, $17 plus maximum. If we were to break back above that line decently, that's going to warrant a decent strength. That's going to come in at 85.67 plus 1 per hour, starting at 6 o'clock p.m. Sunday. A decent penetration there is going to be 152 ticks up until Monday's open. Maintain gap higher. On Monday, we'll leave a minor bullish reversal below, but that'll be more effective if/when we take out 91.17 in the process. Okay, and in the RBOB, I've warned of range expansion today, which we saw, especially if you include Globex trade. The maintain gap higher on Monday will leave a minor bullish reversal below. I'm not going to go over all the higher time frame stuff in here. I said decent trade below 299.16 will warrant decent pressure. We broke below that here, and we traveled down to 282.37. Decent trade below 283.08 plus 1.4 per hour, starting at 6 o'clock p.m. Sunday. We'll project this downward 11 cents minimum. And multiples of that maximum, 40, 50 cents plus maximum. We break below there decently, back up through it decently, look for decent short covering to come in. The heating oil left the gap open lower on the day. I maintained gap higher on Monday. We'll leave a minor bullish reversal below. That'll be more effective if we take out 361.83 in the process. I would also note that this left a significant bearish reversal above. That warrants a pressure for days/weeks. On the day itself here, it suggests we may see some higher trade up into this gap before/if resuming lower trade. Again, I'm not going to go over all the higher time frame stuff. The trade below 356.79. It's brought in pressure down to 317.01. And the decent trade below 348.75. I said we'll project this downward 20 cents minimum, 80 cents plus maximum. And like I said, from there, we've traveled down to 317.01, easily taking out that minimum. If we were to trade back above there decently, look for decent strength to come in. That's going to come in at 349.44 plus 7 per hour starting at 6 o'clock p.m. Sunday. And the Brent left the gap open lower on the day as well, and a significant bearish reversal above. Warns of pressure for days/weeks, although on the day it suggests we may see some further short covering up into this gap before/if resuming lower trade. We leave a maintained gap higher on Monday. That'll leave a minor bullish reversal below, but that'll be more effective if/when we take out 96.15 in the process. The trade below 96.67, I said now warrants a decent pressure. We've seen pressure right down into here to 86.09. I said today warrants has a good likelihood of seeing range expansion, which we saw in addition, and even more with Globex trade. In the gas oil, we left a medium to large bearish formation above on the day. A maintained gap higher on Monday will leave a minor bullish reversal below, but that'd be more effective if/when we take out 1171.25 on in the process. Just on the day itself, though, warrants we may see some additional short covering up into the gap here before/if resuming lower trade. I said the trade below 1138.11 projects this downward 57 minimum, 335 plus maximum. We saw a trade down to 98,800, getting a good portion of the maximum. Also suggested getting short below this steep line right here at 108 or at 1085.58 minus 181 per hour, and that brought in pressure down to 98,800. If we were to break back above that line decently, that would warrant a decent short covering. That's going to come in at 1067.44 as of 6 o'clock p.m. And we just pinged right off this exhaustion level down here. But it's early for those to hold more than temporarily. And going into Monday, the RBOB is the strongest of the three, the heating oil the weakest of the three, and the crude oil in the middle relative to one another. As I also stated in the gas crack, if you happen to be looking at that, this is also a seasonally bullish time for the gas crack. So we've been seeing some of that rally out of there. Okay, thank you for watching. and I'll see you on the next podcast.